Do you want an approach to assets, profit, and property while dating and married to protect both partners from potential harm if divorce occurs? If so, stay with me and we will discuss how. Greetings, daters of all ages. I'm John F. Whitney, author of the book, I Do If It's Equitable, a philosophy for dating and marriage to avoid the potential horrors of divorce. I will be your host and your guide as we discuss the I Do philosophy. This is section 2, video 5 of 9, the we owe and own element of the I Do philosophy. The guiding principle here is one of honest and open disclosure, so that both partners understand the assets and liabilities each has. This disclosure is essential so that choices made will not exceed the assets or further add to the liabilities of each partner. Employment and children issues can also be honestly addressed with this information. Existing debts might be too great for one income to bear. Therefore, both partners might need to remain working until some debts can be eliminated. Moreover, wants might have to be reconsidered, or perhaps one will have to look for a different partner to provide these wants. Glorious if they do. Let any disappointment come before the marriage, not after. Let wants be put into perspective and be addressed before the marriage, not after. The purpose? There are three. First, to determine the assets and liabilities of each person, so that each person can respect the assets and help resolve the liabilities. Second, to document property and assets that exist prior to the marriage as they are exempt from the marriage. And third, to put wealth and debt into perspective. For example, presume that one prospective partner has 20 pages of wealth and no debts, while the other has but 2 lines of wealth and 2 pages of debt. Clearly, what each brings to the table is known before they marry. And finally, if this information reveals that your potential partner is chronically unemployed or consistently in debt, better to know this before you marry them, not after. The goal? What's mine is mine, what's yours is yours, applies to the assets and liabilities of both persons. But put it another way, you do not acquire my assets or liabilities, nor do I acquire yours. No, these items are from the we believe element of the I Do philosophy, but they apply here. Any material possessions or financial gains earned by each partner prior to the relationship remain in the sole possession and control of that partner. These material and financial gains are not and do not become accountable to the marriage. Neither partner will expect a lifestyle greater than one his or her own income will allow. Common expenses of the relationship will be met on an equitable, prorated basis. A determined percentage will be deposited into a joint account, and the remaining income of each partner will be placed into their respective personal accounts. Any and all other income sources are not subject to the prorated expenses, but are subject to a joint account obligation. What remains is placed into that person's personal account. Now consider some rules to follow regarding profit and property while you date and marry. I will not expect anything of my partner that I cannot or will not expect of myself. I will not expect my partner to provide any material possession that I can earn for myself or that I can afford by my own means. I will not impose a financial burden on my partner or myself. I will not consider my partner as a means to a financial or emotional end. I will not obligate the relationship and therefore my partner in any financial matter without first discussing it with them. I will not expect to gain more from the relationship than I have equitably earned. I will not expect to leave the relationship in a financial position greater than I had upon entering it, unless I have equitably earned the same. Now, at some appropriate point in the relationship, A personal wealth and liability worksheet should be completed by each partner. The book I Do If It's Equitable offers such a worksheet. Unfortunately, editing software does not accept Word file documents. Begin to document the contents of this worksheet for incorporation into a future I Do contract. Okay, no worksheet, no worries. The items on the worksheet can be discussed just as readily. For example, assets could include bank accounts, real estate, trust funds, annuities, IRAs, certificates of deposit, money market funds, alimony, child support received, and property. Liabilities could include bad debts, unpaid debts, taxes owed, car loans, personal loans, equity loans, education loans, liens, levies, garnishments, alimony, child support paid, and mortgages. Watch for the if-then correlate. If your prospective partner's intentions are honorable, if their reasons for marrying you are pure, honest, and worthy, if all they seek from a marriage with you is love, romance, and intimacy, then they will not be offended or unwilling to accept the equitable I Do philosophy and its ultimate contract. We have share and divide. Property. Even the most amicable of divorces can quickly become ugly once the divorcing couple begins to fight over things. A cynic such as myself blames this ugliness on the divorce attorneys, who earn their income litigating such battles. For example, pets turn into treasured items. He or she might fight for a motorcycle that he or she can't even operate just to spite the ex. Even the legal fees become fuel to the fire. Avoid this hell altogether. How? By adopting the I Do philosophy belief that what's mine is mine, what's yours is yours, what's ours will be equitably divided. Now the purpose is to provide a means of defining and dividing the material gains acquired during the marriage, before the marriage occurs. The goal? By strictly defining and dividing property acquired during the marriage, spouses or former spouses should not become adversaries regarding the possession of any item. Rather, the exact percentage of ownership of each item acquired is and has been known. Therefore, during and after the marriage, property division should never become an issue of contention. This, in turn, renders moot the need for attorneys to fight for property that does not belong to you. The ultimate goal is to protect each partner. By strictly defining property division, no partner gains more from the marriage than they equitably contributed to it. One former partner should not be financially destroyed by the other and/or by attorney costs. Women need not fear financial abandonment, as their well-being upon divorce will be discussed and agreed upon before the marriage even occurs. Each will retain what was theirs prior to the marriage, and each retains the personal savings accounts acquired during the marriage. Both, on a prorated basis, provide for the children. Protecting the children is a top priority. The higher income partner might have to surrender the house for the good of the children. Therefore, the ex-wife need not and should not continually file court motions seeking yet more from the ex-husband. Since ownership in property is clearly defined and divided, the courts need not be clogged with the personal wars which the current divorce system fosters. This equitable solution allows for honor, decency, and kindness to prevail rather than greed, spite, avarice, and cruelty the current divorce system thrives on. Most important, both partners can begin to enjoy a new relationship with a minimum of interference from any previous relationship. Profit. Obviously, profit from the relationship commences once a commitment occurs. Profit is defined as any material or financial acquisition that the relationship produces. Recall that we believe item 1 assures that the possessions and money which each partner brought into the relationship remains theirs. The personal wealth and liability worksheet or similar instrument will establish the property and finances possessed by each partner prior to the marriage. This is important, as any item not exempted from the marriage becomes the property of the marriage and will be equitably divided upon divorce. The guiding rule is simple. Anything acquired during the relationship comes at a price for the item. The equitable contribution of each partner toward the possession of this item makes this item possible. For an example, let's say she earns 4 times more than he. A dining room set costing $1,000 is purchased. She pays $800 towards it, while he pays $200 towards it. Upon divorce, the dining room set is sold for $500. She receives $400, while he receives $100. Neat and simple, right? Assessing ownership of acquired property might be done quarterly by some and annually by others. Whenever this assessment occurs, include all new material possessions and financial gains which the relationship has produced to that point. Written documentation of some kind should describe the item acquired, the cost, and the percentage contribution of each partner towards its possession. Also document miscellaneous income sources and their obligation to the relationship. And remember, a gift of any sort, from any source, is not an acquisition of the relationship. It becomes the property of the person that received it. Finally, an annual accounting of all assets and liabilities prior to completing tax returns is probably a wise thing to do. Profit and property acquired by the relationship could be divided as well. At the very least, when income changes do occur, the joint account might be divided according to the previous equity percentages. For example, presuming that my responsibility in equity is 3 times yours. I will be promoted to vice president. My income increase will result in my earning 5 times your take-home amount. Dividing the joint account prior to this equity change assures each their fair share and just amount contributed to date based upon the previous 3 times amount. The joint account can begin anew based on the new 5 times equity level. This concludes our discussion on the we owe and own element of the I do philosophy. Our next topic will be on equitable solutions to money-related dating and marriage issues. I hope you will join me. If you learned anything of value, please consider hitting that like and share button. Leave me a comment, especially if you have a question, concern, problem, or issue we might be able to solve together. Or perhaps you can assist me in improving my presentations to you. And finally, if you feel that I am worthy of your time and effort, please consider subscribing. And don't forget to hit the bell icon so you will know when I upload a new installment of the I Do Philosophy. Until next time, date wisely, date safely, and remember, I do, if it's equitable.